What's up, guys, and welcome back to my YouTube channel once again. So I know I've been away for a while now, right? And it's all because my system got hacked, and so I was facing a lot of technical challenges, but now I fixed it, right? And so I'll be feeding you guys with insane content once more, right? And so real quick, today we'll be looking at the market. I'll be showing you what I will be looking at for the upcoming trading week, right? And we'll be talking about gold and euro USD. Okay, so real quick, let me start with euro USD and let me show you what I'm looking at for the upcoming trading week. Okay, so I'm going to start from the weekly time frame as always, the higher time frames, right? So on the higher time frames, just by looking at what price is doing, you can tell that euro USD on the weekly time frame, we are bearish, right? We're making lower highs and lower lows, and this was the last high that created this low on the weekly time frame, right? So real quick, we will step into the daily time frame to see what price is doing. Okay, so the weekly leg that we marked started from here, right, to this level. Okay, so within this weekly leg, we had the daily, doing this. We had this first break of structure right in here, and personally I considered this also as a daily break of structure, and so this was also another daily break of structure to the upside, right? And then we quickly had this push all the way to the downside. Okay, so yeah, on the daily we are working within this leg. Okay, so daily we are also bearish, so we have two higher time frames aligning, right? The weekly and the daily, they are all bearish. Okay, so after identifying the direction of the daily time frame, we can now start looking at our point of interest, right? So on the daily, our first point of interest is going to be this block over here, which can be refined on H4, right? And the next block will be right in here. That is where price already reacted from. Okay, so I'll step into the H4 time frame and refine these blocks. So if I refine the blocks, I'm going to get something like this. The first one is going to be right in here as a supply zone, right? So I'm going to show this real quick. Supply. The next one is going to be, let me zoom this thing in. The next one is going to be right in here, okay, as our next supply, right? And we can see that price never got into that. And the next one is going to be this range over here, and that is where price came to. Okay, so we can see that price is reacting from this one. Now another thing that I need to pay attention to is the fact that this supply zone that we have has equal highs, right? The reason why I'm saying pay attention, I'm going to talk about it very soon. Okay, so we have equal highs right in here, so you need to pay attention to that. Now here on the H4 time frame, right, we've already defined that this is our daily push. Okay, and so on the H4, all what I'm seeing is price making higher highs, higher lows, higher highs, higher lows. And right before last week closed, we had this low taken out. Okay, so here on H4 also we are bearish. So we have all these three higher time frames aligning. Weekly we are bearish, daily we are bearish, H4 we are also bearish. Okay, so let me put this right in here like this and indicate that as an H for BOS. Now that we've been able to identify, the direction of H4, we can now start looking for our point of interest, right? So the first one will be right in here, okay, as an H4 point of interest. And the second one will be right in here also as another H4 point of interest. Now, what this means is that I can expect price to, if price decides to make any retracement, I can expect price to come into any of these levels, then we can sell back now, okay? Or we come back into this level. So this was where I was telling you that you need to pay attention to this equal highs right in here, right? So if price comes in here, you just have to pay attention to whatever price should do. Probably we can even breach this and tap into the higher one, okay? But I can't tell until price gets there. So let's just wait patiently, okay? So in as much as we are anticipating a pullback, we can't just wake up and then just anticipate a pullback just like that. No, we need to wait and see how the intraday time frames will be speaking to us about this possible pullbacks. that we are trying to look at. Okay, so real quick, I'll step onto the M15 and we're going to see what the M15 is saying about these pullbacks. Okay, so here on M15, right, this is what happened on last week's price action. Okay, so we had, this high. This was the last high that created this last low. Okay, so M15, we are also bearish, so we can see what price is doing. Weekly bearish, daily bearish, H4 bearish, M15 is also bearish, right? And we have broken an H4 structural level. Now this is what I'm looking at, and this is what I think can happen. Okay, now if the market opens, right, we can have price taking out this low right in here. Okay, now if this happens, if this low is taken out, we're gonna have this high to this low as a new M15 structural leg. Okay, after this leg is created, ideally we should have this level in here as our supply zone, which means that we can expect price to come into this level and push all the way back down, okay, to continue with the bears. But this is what I'm also anticipating. Now this low over here was the low that was created on Friday, and when I take price back, right, you can also see that this low was the low that was created last week. Okay, so when the market opens and we grab this low, it will be like previous weekly low grabbed, right, which is also liquidity. And so we can expect price to do to make a push to the upside. Another thing that we can see is that instead of price holding within the supply zones to push down, we can have price breaching this supply zone. Okay, and the reason why I'm saying that is always you need to be watchful of your surroundings. What do I have here? We have equal highs, that's liquidity. Okay, so if I have this liquidity here, I'm so much looking at price to be attracted to this liquidity. Okay, so that is what I'm expecting, that is what I'm looking at. Okay, but always I'll be reacting to price. It's just that I'm trying to create the possible scenarios that can happen. Okay, and so in as much as I've said that we'll have this low from Friday taking, another thing that can also happen is that we can have price immediately pushing all the way to the upside to take out this equal highs, okay, before maybe a retracement before we can continue the push to the upside. Okay, but these are all scenarios that I'm trying to put across so that you can have options to choose from in case the market opens and it starts towards build up price. Okay, so that is what I will be looking at on Euro USD. So if this Friday's low is taken out and price is coming back up, like I said, supply zone right in here, we can expect a reaction from this supply zone. Price can continue to the downside, okay, and continue with the bears. Another thing that can happen is we can have price pushing all the way to the upside because of this equal highs, right? We're gonna break structure, okay, and then we will start making that retracement into any of the supply zones of H4 that we marked. Okay, so if price gets into any of the supply zones of H4 that we marked and it decides to give us a reaction, then we can start looking for sales to the downside. Okay, but I think all this price action will be built up within the week. Okay, so yeah, that's what I'll be looking at on Euro USD. Real quick, let's step on gold and let me show you what is happening on gold also. So as usual, you're going to start from the higher time frame, the weekly time frame. Okay, so when I come onto the weekly time frame here on gold, you're going to see this is super beautiful. Now we had this beautiful low which created this high, right? And we can see what price is doing, like some sort of a complex pullback, right? And we had this liquidity from I think 2 years ago, right? 2020 built up. We have that liquidity grabbed. Okay, now when that liquidity was grabbed, it was grabbed into this point of interest right in here. Okay, you see how price built up. So we had that liquidity, all this liquidity built up, grabbed into this point of interest. Okay, so after we tapped into that point of interest, what can we see the weekly time frame doing? We can see that this was the last high that created this low, right, into that point of interest. So we've had a weekly break of structure to the downside on gold as well. Okay, real quick, we can step into the daily, knowing that the weekly is bearish. Okay, so here on the daily time frame, now this is something that I teach properly in my one-on-one sessions. Okay, so in here, this leg, which we know as a weekly leg, is also a daily structural leg. So I'm just going to be looking at the H4 time frame as my structural levels to concentrate on. Okay, so here on the H4, I had this high which created this low. I had this high which also created this low. I had this high which also created this low, and this last high which created this low. And then we broke structure to the upside. Okay, so H4, we are bullish. Okay, however, the weekly and the daily are bearish, right? So we are bullish on the H4. So let me quickly indicate this as an H4 break of structure to the upside. Okay, H4 BOS. Good. So now that we've been able to identify this structural leg of H4, we can now start looking for our point of interest, right? So I'll take my Fibonacci and I'll extend it from the low to the high. The reason why I'm doing this is we have so many points of interest right in here, okay? But we need to look at those that are within, discounted zones. Discounted because price is bullish, okay, within this particular time frame. Okay, so where are the points of interest? The first one is right in here, which is my origin demand or my origin point of interest. The second one is right in here, also as demand. And the last one is right in here. Okay, so I have 3 points of interest to watch on gold on the H4 time frame. Now, another thing that you should also look at, always pay attention to your surrounding. If you look at this point of interest right in here, what do we have? We have equal lows right in here. That's liquidity. Okay, so always pay attention. Okay, once we are trading off reactions, you don't need to fear, but you just always need to pay attention to your surroundings so that you don't fall, victim to this kind of traps that is built around all the time. Okay, so right in here we can see that price is coming into any of this point of interest. We can have price retracing all the way into this point of interest and pulling back up, right? Or even coming back down to grab this liquidity into this point of interest and pulling back up, or even coming into the last one and pulling back up. Okay, or what I'm trying to put across is right now H4 is bullish and current price action is retracing into any of those points of interest, right? So real quick, we can look at the intraday time frames. So H1, here on H1 we can see that we had this last low which created this high and it has already been taken out. Okay, so H1 we are bearish, just to show you that price is what's beginning to make a retracement. Okay, so real quick we can look at the M15. Okay, so here on the M15, right, we can see how price action built up. We had this high which created this low and we broke structure right in here, right? And I'm almost tempted to say this high to this low is also one leg, which is also fine, and we're gonna have a new leg from this high to this low as well. No problem. If you want to mark this high to this low as 1 M15 structural leg, I mean, that is also cool. There's no problem with that. Okay, and we can see that price retraced into certain levels, right? So we can see that price didn't come into this other block right in here, but what did it do? It came into this imbalance right in here. So it's also valid for price to move all the way from here to the downside. Okay, so this is what can happen when the market opens. We can have price, just like in the case of Euro USD, we can have price taking out this low right in here, which was the lows from Friday, and I think it is also the previous week's low. Okay, so when this low is taken out, we're gonna have this high to probably this new low that is formed as our new M15 leg. Okay, and just like Euro USD, what can happen is anytime a target liquidity is taken, you can look for counter trend trades. Okay, so what can happen is we can have price pulling all the way up, and because M15 is bearish, like I always preach, reacts to price, right? We can have price coming into this level right in here, right? Then we can make a push to the downside, continuing with the bears. Okay, another thing that can happen is instead of this level holding, Okay, we can have price, coming all the way into this level, breach this level, which will cause an M15 change of intent. Then we can have price, maybe make a retracement and continue with the pushes to the upside. Okay, but personally, I think once we have, this demand zones in here, probably when price comes into this level of supply of M15, we may have price, respecting it and pushing all the way back down into these levels before we can start looking for, certain trades to the upside. Okay, so this is just what I'm anticipating, or what I'm looking at on these two pairs, right? Always react to price. That is what I always preach. Follow price closely, react to price. Okay, so that you don't get lost. Okay, so I'm gonna end today's video, and I'll see you within the week for another insightful video. Okay.